So there's a new HMRC consultation running at the moment, and it's running from the 23rd of June until the 4th of August. Not a lot of people know about it, and it is Labour and HMRC putting together an idea of this new timely payment system, which is essentially getting people to pay their self-assessment tax. And so this will affect sole traders and landlords paying their tax monthly. This would be based off of your prior year's tax return. This is essentially an evolution of payments on account, which if you have more than £1,000 in your liability, you pay 50% of that tax in the January and 50% in the July, and that goes on account towards your next year's tax. So that same principle is going to be in place, but instead of doing it in the January and the July, you'd pay it monthly. The same as currently stands with payments on account. You will be able to reduce those down. So if you feel like your next year isn't going to be as good, or maybe you're changing your structure, or maybe you've sold the property, so you're not going to have as much of that happening, you can let them know when you're filling in the tax return, you want to reduce those payments on account. But obviously, if you do that and you end up having more tax to pay, then they'll be potentially interest and fines like the current system is in place. So the main thing is that they're rebranding this as like timely payments, and it's changing from twice yearly to monthly. And let's say you were £1,000 liability, so you've just hit that threshold that you have to pay that. That would mean that you've got £1,000 liability, and currently you would pay £1,500 in January, the £1,000 plus the £500, the 50% of your payment on account, and then you'd pay the next £500 by the 31st of July. What this is putting forward essentially is that you'd have that £1,000 and you'd pay that, and then you'll now pay £83.33 roughly every month for those next 12 months, and that would then cover your £1,000 on account for next year. Some people might even be in favor of this because it's more bite-sized chunks rather than two big chunks potentially. Having to pay this every month on a direct debit. Obviously, HMRC are a big fan of this because it's more cash flowing for them. Going to be coming in earliest 2030 is what they'd be looking at. They'd be using the 2029-2030 tax return as the first one that they judge this off of. I'll leave a link in the description below so that you can look at the consultation. It's all there, and you'll be able to put your thoughts on an online form, or you can email HMRC and give your opinions on it, because this is kind of like a wider thing where if a lot of people are disagreeing with it or don't like it and stuff like that, it might not go ahead. So you can actually have your say and be listened to, hopefully. Yeah, let me know what you think in the comments below. Do you think this is a good change? Do you think this is a bad change? And where do you stand on it? Like I said, no changes for limited companies or anything like that. This is purely for sole traders and for landlords.